What's up, everybody? Chris Dover here, founder Pollinate Trading. This week, I'm coming at you live from my parents' house. Family traveled up to visit my parents this weekend, and I decided to continue on with the video of doing the weekly market overview video version. We did it last week, covered the Nasdaq, covered a good game plan. Kind of seems like everything's playing out as we were looking last week. I'll get into all that here, but let's jump right into. Let's get going right on the Nasdaq right now. This is obviously my favorite, and well, I love it. If you aren't already subscribed, go to pollinatetrading.com/subscribe. Sign up for the free newsletter. I at least send this out once a week, in addition to multiple updates during the week. It's free. I'm trying to give you as much actual usable tactical information as well as teaching along the way. And I'm hoping that it's the best thing I can do for you. Okay, let's have a look here. Like and subscribe to the YouTube channel too while you're at it. I got to get better at that. All right, so let's have a look. Last week in Nasdaq, we had an incredible price action based scenario, and everything I always talk about. Remember, one of my favorite phrases is when we're in a bull quiet or we're in a bullish regime, generally speaking, the best looking sell setups fail. When that happens, we buy. Now, what I mean by that, and I'm going to kind of bring this out a little bit. I don't know how easy it is to see, but this was Friday, this was Thursday, this was Wednesday, this is Tuesday, this was Monday. So this is looking like the beginning of the world is going to end. A 15.7 peak down to, let's see what we got to here, low 1408, so a high of 15.7, so a 900 point move down from the peak on Nasdaq in a couple of weeks. And I remember we were buying all the way from June all the way up, and we took over half of our position off. We took 4 Nasdaq contracts profit, and the week prior, the end of the week prior, we kept 3, rolled them to December expiration. So now we're averaged in over here, and then we picked up another contract. So last week we took some heat on it, and whoopsie-doo, we've got 4 contracts out of like a total of 15 that we plan on having after this campaign takes off and does what we expect it to do, is continue to go higher and higher. Okay, so let's just say that you're a regular market participant and I don't know, you bought over here. And now all this starts happening. You start selling, you're early, you sell here, it sells more. It's starting to look like the most bearish thing in the world, and everybody's bared up, right? You have what was this, like probably down about 3% on earlier in the day on this. So that would have been Monday, I think. Pretty big sell-off on Monday, which we traded, we day traded that, and we were short that day. And then so just seeing that big sell-off here, 1, 2, 3, 4, 5, 6, 7, 8, 9, 10, 11. It looks like 9 out of 11 days was a down day since the beginning of September or so, more or less. So everybody's bared up. Everybody's talking about September, worst time of year. September is the worst month, historically speaking. Everybody's bearish and blah, blah, blah. The world's going to end. Now they're talking debt ceiling. We've got, I don't know, budget. I don't know what everybody's talking about, but it's bad. It's scary. And everybody's really scared and fearful, and the world's going to end or something. And so everybody's selling, right? Now, what we had here, we had this big sell-off here. This was about 1.5% sell-off. This is a 3% sell-off at its peak, came down to about 1.9%, so right around 2% sell-off. So just some good selling right there. And then this candle pattern right here. There's only a few type of candle patterns that are actually interesting, and it's a bit deeper. Just seeing a candle pattern, or just seeing, oh, that's a shooting star, that's a doji, that's a cloud. context is really the most important thing when it comes to price action and trading. So we got what's called a shooting star. You can call that an inverted hammer. You can call it whatever you want. It doesn't matter what you call it as long as you know what it means. This one right here. This is just a big down bar. So it opens, kind of had a bit of an up day, and then went straight down all day long, straight selling. The next day, a little bit of a bounce. Maybe we're going to do it, and then just straight selling, which actually got caught in the end. And so the tail here, this tail on that candle is actually a little bit bullish because bears had total control and they couldn't do anything with it. Now we're at the end of a trend. Let's just say a trend has been established. A shooting star or an inverted hammer, that is, it opens and closes at the bottom of the range, and it has rallied up in the day and then comes all the way back down at the end of the day. So bears were in control. They lost control. Bulls took it back, looked strong. Bulls fumble the ball. Bears succeed. They take it lower. That right there, a shooting star or an inverted hammer in a downtrend, this is a bit of a downtrend, is the best looking sell setup in the world, because bulls you just wiped out a bunch of bulls. So bulls came in and they're hurting. A bunch of bears added in. So now it seems like, well, we're off to the races. And what is important about this, okay, so you can't just say to yourself, okay, well, we got a shooting star in a downtrend, or an inverted hammer or whatever. Bulls had control and they lost it in a downtrend. This is bearish. Okay, couple things we need to look at. The underlying asset itself, what we look at in the euro or in, let's say, interest rates, or our gold or something like that. Indices like the Nasdaq are structured differently. So you can't apply everything you see in one market to another, because indices are optimized strategies in and of themselves. That is, the index creator, they go out and they get the best performers, best performing companies that would jump into their universe, that would trade on the Nasdaq, and they add those to their index. And if you're an underperforming company, they throw you out. So it's just kind of like if you had the choice of 100 athletes, I'm sorry, you had a choice of a couple thousand athletes and you had to pick 100. Basically, your team would be, better if you went and picked the top 100 athletes instead of just randomly picking 100 and leaving them in there and never changing, right? So if you're constantly getting rid of injured players, of people who have kind of left their prime, exceeded their distance in there, all the things that could just somebody who just doesn't want to play anymore. Maybe somebody is a certain type of player and they want to make a change, and that change they have to go away for a while. Same with companies. You have a company that like Kodak was, just ruling the world on pictures forever, and then something like Facebook and Instagram and Apple have, unseated a thing like Kodak by just putting a phone in your pocket that you don't need to print these things out, because everything lives online now, right? So same thing with indices. Indices like the Nasdaq 100 goes out and gets the 100 best companies on the Nasdaq, and then throws out all the other crappy ones. So by definition, this thing is going to go higher as long as the economy is not getting crushed. Okay, when the economy is getting crushed, it'll go down for sure. It'll react to it, but it will eventually turn back up and then rise again, just like the economy. So understanding the game you're playing. Now, I'm not talking about, the next 10 or 20 years type trade. I'm just talking, this period, this window of time. So you may be super bearish thinking, well, the dollar is going to fall apart or hyperinflate, or the bubble. Our buddy Savan on Twitter has said that the Fed is criminals or something, and he's got so many followers, so he's right, and I like bearishness and all that. Doesn't matter. When we're talking about this time period, you just got to remove that stuff from your mind and just think, okay, where is the most likely direction of travel? Well, over time, that's up. Okay, cool. Now, that doesn't mean you just go and jump in and go long all the time, because we have these things called leverage, and we have these drawdowns and we have all this other stuff going on in the markets that don't make it easy for somebody to just go in and buy because they feel like it's a good reason to buy. The reality is you need to, once you understand that you don't need to think constantly about everything else, you can just focus on one or two things, then all the worries and concerns are not there. You say, okay, well, the bullish trend on this is this is always a bullish thing until it breaks. So let me find the low risk places to get in and not mess with the high risk places. Everybody wants to play that high risk game, and that's why everybody, so many people lose money in the markets. 96% of traders who try out for prop shops fail. So only 4% can actually trade professionally. So if you're just doing the random easy stuff that you think, or you're trying to be Mr. Clever because read Sven's tweets, or got zero hedge on tweet deck alerts, so you're constantly getting fed on irrelevant data, then you're going to be the sort of person that we're going to take advantage of, because you're going to be buying at the worst times over here at the top, and you're going to be selling at the worst times down here at the bottom, where we'll be taking profits up at the top and we'll be adding down in the bottom. Okay, so kind of soapboxy moments there, but best looking sell setups in the world. Boom. And then this shooting star happens. Okay, so now this is a trigger because bulls came in, bought this dip hard. Bears said, no. And they just stomped it. If you're playing, they played excellent defense, and they turned the ball over, and Bears were in control. And then the next day, and this is where it really gets wild, it goes lower than the previous day low. Now that's an automatic sell signal, and I guarantee every bear in the world who is actively trading, if they weren't already short, they shorted that. And what you can notice is that's nearly bottom tick, minus this day, of course. That's a pretty, that's selling the bottom of it. That's not, that's not important. Now, what makes this, a little bit more like three-dimensional chess. So again, oh, that's a shooting star in a downtrend, you sell it. You got to understand context. And the context is that the Nasdaq is optimized to go higher. The US economy is controlled by, the Federal Reserve is basically doing everything it can to make sure that the market goes higher. Okie dokie. And there it goes, going higher, just goes higher. Oh, the US government's getting behind it. And it's just, yeah, you have some shaky days here, but they don't really last. You may remember these days, the COVID thing. You remember 2018 meltdown. You remember the pre-2016 election. You may remember the flash crash over here and US debt downgrade and all those other things. But look how minor they are. We're talking about a price of less than $1,000 to 16,000, almost 16,000. So these minor, well, what about this and what about that? And yeah, sure, you can point to those little minor events. Your job is to just not get over levered when those events are likely to happen. We were at a position that was, I thought it was pretty contained. I thought it was just going to be drifting sideways and do its thing. It turned out that it, got a little ahead of itself and took off a little bit. Okay, cool. Good news that I took profits already from, we already took profits from over half of our position over here. So we were sitting on a small position relative to our max exposure. And, we had a bunch of cash sitting there waiting to start adding. Okay, so we took a little stab here. Well, it went against us. Okay, cool. No big deal. I'm not worried because, that's 4 contracts out of 15 or 20 that I'm going to have. That's not even a quarter, not even 25% of the full load. So I'm not too worried that. Now, then we start selling off. Okay, and this is where it becomes extremely useful, the information. So when all this starts happening and I see this bullishness happen, and then I see this shooting star, inverted hammer, I think to myself, and you'll see if you're in the trading lab or you talk to me at all, I'm always waiting for the failure to happen. And what do I need the failure? What does the failure happening look like? It is when the best looking sell setups in the world fail. And what do? Is I put an entry above this shooting star and let the market pull me in. If it just kept going lower, I wouldn't have added anything. I would have just sat there and let it go. But if it comes and takes out this shooting star, that negates the shooting star. And that now becomes a failed bearish setup, becomes an extremely bullish setup. When you have a really strong signal in one direction and that direction fails, that's the market telling you that everybody was positioned, too many people were positioned for this outcome that was just so pretty and obvious, and they just got stomped. The market's doing what it wants to do. It's seeking volume. It's seeking to, stop out as many people. Is there's going to be stops over here, so stops get ran. There's going to be stops down here, stops get ran. More stops up here, and more. So bears are going to have stops up in here. Bears are going to have stops here. Bears had stops here already, which caused that. Bears have stops here already. So remember, when you're short, in order to cover your short position with a stop loss, you have to buy to cover, right? So that's more buyers coming in. And when bulls see that, they, I got to buy. And, oftentimes you see this, it spikes up and then it comes back down. Okay. Best looking sell setup in the world failed. Boom, off to the races. That went from 15,165 all the way up to 15,3. So a little bit less, like 180 or 180, 180 points or so off the lows. Or I'm sorry, above from there, not off the lows. Off the lows, 1408 to 15,3. So 500 or so points off the lows, about 180, 200 points off the failed bears failed attempt. And then, so Fed announcement, little follow through the next day. And then on Friday, we have a bunch of selling that gets bought and we put on another bullish candle. And this is now a hammer. So a hammer is the opposite of a shooting star, or the opposite of an inverted hammer, which is more easily explained. It's that it opens up high, goes all the way down, bears lose control, and bulls rally it back. So even though it's just a small little range that open to close, the low, the distance that it traveled, it ran a lot of stops. It took a lot of people out on that trade and then rallies back. And so what you need for a bull market to continue is you need buyers, right? You need all the buyers, like all the people not in the train. You need the train to leave the station with a bunch of people sitting waiting for the train, thinking, yeah, I'll get on the train in time. And typically what happens is everybody's saying, I'll just sell here and buy back when it's weaker, right? How many times have you thought to yourself, oh, this is whatever, I'm going to take profits here and I'm just going to buy it back weaker. The reality is most people, sell here or sell over here, and then they start saying, oh crap, I got to buy this thing. I thought it was going to dip more. I got to buy it more. So they end up buying here. And at that point in time, everybody who's bought has already bought. And the only thing left to do is to sell. And so they start selling and it gets going. And everybody who bought over here thinking they missed it now gets stopped out. So it adds to the selling. That's why this big candle happened here below these swing lows. Boom. And then now we're back into, remember last week I talked about the top of the neutral zone and the bottom of the neutral zone. Everything that's happened this last month happened within a neutral zone. That is, it's not really that relevant. What the market's doing in here doesn't really matter. Our job, because we know we're going to have the strength of the regime to take us higher. We just need to figure out low risk places to add exposure. Once we can confirm that we're back above the neutral, midline of the neutral, and the neutral zone is just simply last month's high and last month's low. So if we were to look at a monthly candle, it would be the top of the candle and the bottom of the candle. And then we just put a line in the middle, which says if we're below it, we're generally bearish. If we're above it, we're generally bullish. Nothing too exciting about it. It's just, okay, we're going to, if it's getting colder outside and the sun's starting to set earlier, it feels like fall. If it's getting warmer outside and the sun's, setting a little bit later, that's spring, it's just understanding the seasons that you're in and then saying, okay, well, I'm going to play with the appropriate tools of that season. Okay. So that happens. And then on Friday, we get that beautiful hammer. Everything's bullish right now. Everything's signaling bullish. We go into the weekend. Again, people are scared. COVID stuff. We've got the debt ceiling. We've got the infrastructure bill. We've got new prime minister elections in Germany, you know, whatever. Pick a reason to be scared. That's people are going to be scared. Now, one thing that can happen is this thing can just keep going. Just it doesn't have to pull back here and do another fake, but it can. As long as it stays within the neutral zone, that's not really that big of a deal. And even if it breaks out of that neutral zone in either case, it's kind of not that big of a deal. If it goes down in here, we've got such small position exposure at the moment, easy. If price action continues to show bullishness and we get some more attempts at weakness, then we're just going to say, cool, I'm going to add a little bit of exposure here. Now, one thing, you know, yes, this is probably the best place for me to add. I missed it. I didn't take it. This is also getting above, you know, buying above this hammer is also a great place to look to add. So somewhere around in here, I'm looking to add to my position this week. It could be once even twice that I look to add. Ideally, I just want to add once, but there might be multiple opportunities. And that's on the swing trading side of the NASDAQ. On the day trading side of the NASDAQ, that's a completely different story. You know, being prop trader, you know, I'm working with Top Step Trader. You should definitely check them out if you're a day trader. I think in my mind, I think they're doing the best for day trading. So once we get out of the neutral zone here, now we start looking at, okay, what was the measured move? So we got from 15.7 down to 14.8, right? So 900 points, 15.7 plus 9 is 16.6 is probably our next measured move target on the NASDAQ. And if I have a look at our 16.3 puts us at R3. So by the end of September, Monday is September 20. Well, today, Sunday, September 26th. So in order for us to fulfill the requirement of a major market top, we would have to close this week above 16,290. Of course, we would also have to be in the bull volatile market regime, and we would have to be parabolic. If we were to close at 16,290, I would say that would be parabolic. We would most likely be in bull volatile rather quickly, and we would have closed above the R3 pivot. None of those look within reach at the moment. 1,000-point move, 27, 28, 29, 30. We got 4 days. So before Friday, we have to close above 16.3 in essence. So 1,000-point move. If that happens, then we could possibly have a major market top, and we could get some more seasonal some more weakness. But if that doesn't happen, and we just keep, you know, drifting higher, and we don't close above the 16.3, and we stay out of bull volatile, we don't go parabolic, then we can easily, that gives us a couple of months. So this month pullback, remember how August was? It felt like, you know, nothing was happening. It just kind of like, it felt bearish, and just nothing was happening. And then the last week, it just went bam, goes from 14.8 all the way up to 15.7, right? Almost 1,000 points in that period of time. So it's totally doable that NASDAQ can do it, but unlikely. All right, so that's NASDAQ, my favorite trading vehicle of all time. And being in the neutral zone, we have the opportunity to bang around in the neutral zone. The new neutral zone next month would be the high, whatever it was, 15.708 down to 14.8. So, you know, a little smaller neutral zone, but still, what it'll end up looking like on a monthly chart is you're going to have an outside candle, an inside candle this month, and another inside candle. Well, until next month breaks, so it's big up move, consolidation candle, and then another up move or down move or whatever, how it works. Okay, let me get to the Bitcoins. And let's take a look. Let's turn this thing off because it's not useful at the moment. And let's take a look at our weekly Bitcoin here. Everything still looks great to me. The analog to 2017 that I've been really paying attention to, especially this month, had a sell-off happening right around Labor Day, lasting about 2 to 3 weeks, bottoming, and then moving to all-time highs. Well, that looks like we've got big down week, right? We had a consolidation week last week or the previous week. This past week, we had another down week, and that's been reversed so far as a weekly candle. So we're going into a bottoming type scenario on Bitcoin right now to end the week. Here in a couple hours, this candle will close. And if the analog is as good as it's been pretty on the whole year. That should move us to new all-time highs into the end of the year. So, the end of the year in the United States, January 1st, December 31st. Somewhere between November and December, we should get a top and then rotate into our next positions. And then we'll be looking at in 2022 a different risk profile for crypto. Probably more of a bearish move in crypto for a while, starting in and around 2022 and lasting, of course, into the halvening. Somewhere within 2023, 2024, we start looking for real bottoms to start acquiring more on the long side. So right now, everything looks as planned. See, we've got these shadows and it's holding. We had a troll bottom, basically a triple bottom held. And I call this a troll bottom, but it's also a failed breakout retest, a breakout to the downside. We've ripped and now we pull back and test. And oftentimes when you have a big spike out, you pull back to retest this area. This is what's called a value area. So it's from $40,000 to $30,000. It's valuable. It's a neutral zone based off of what we just recently talked about. That's neutral. So everything within here is neutral. Once we broke above it, now it's in a bull move. And then now we're pulling back to retest this neutral zone. It looks like the retest of that neutral zone was bought. And so now we can start. We've worn out quite a lot of bullishness. There's a lot of bears in the world right now. There's a lot of bears in crypto right now. And that's fine. Let them be bearish. We have to understand the incentives behind, well, let's talk about Bitcoin specifically. With a limited supply, it's a supply and demand, right? This is exactly supply and demand. If something has a lot of demand and low supply, the price will go higher unless there's somebody to step in and fix that. Like a fiat currency is an example of why currencies don't go higher, because that would be very inflationary. That's why fiat currency exists, is so that inflation doesn't take off, and they can control it that way. They can control an economy turning into a Venezuela type scenario. So we're looking at Bitcoin to continue moving higher. We didn't exactly get a 40% sell-off. We got about a 13,000% sell-off from, that's about a 10, I think it was 10 to 15% sell-off. Not as big as we had expected. Now, Ethereum did have about a 35% sell-off. So let's just have a look from the highs. Let's put percent on this. Yeah, Bitcoin or Ethereum got down to about 32%, and that's about right. That is right on par with the 2017 analog. So I would expect the move, Bitcoin and Ethereum, to lead for the next few months. Of course, certain alts, shitcoins, and whatever are going to do incredible things. I don't think we're going to see 1,000% moves in Bitcoin and Ethereum on a single day basis like we can in certain alts and things. And so we do maintain a small strategy with a small allocation to altcoins in the trading lab. But at the moment, I don't have, I expect that to underperform the large cap names, especially as we move into the last part of the year, the next quarter of the year. And hey, who knows if the infrastructure bill goes, if debt ceiling, I don't know. Pick your reason to worry. There's still a lot of wallets acquiring and holding on to the big caps and not moving to other currencies, right? So if you've got Bitcoin at 30,000 or Ethereum at 3,000, look at how much time it's spent at 3,000. Yes, it broke below it, but we could probably, this is a good value area down here. Here's another one, and then here's a big one. So at the other end of this is these fake outs give us a lot of information. This right here is bullish. We can easily see that we're in a bullish trend. We're in a bullish cycle in Bitcoin. So everybody's racing to get into these things. Most people are doing a dollar cost average. So you have to understand that we're getting, not most people, a lot of people are taking a chunk of their monthly income, whatever source it is, and they put it into crypto. So there's a perpetual bid, just like there is on equities with the 401ks and IRAs coming in every month. Other than that, I have some thoughts on dollar. I have some thoughts on natural gas. I have some thoughts on a bunch of other ones. And I have some thoughts on Apple. Last week we covered Apple. I'm going to get back to that, what I'm looking at on Apple. We still don't have, like that was nice. Now this was nice. Remember what we talked about last week, value area test, like a reach, held it for a little bit, wanted to come back and reconfirm. Okay, we're top of the value area. Test again, boom, we expanded, blew out, went to a new value area, tried to push again, failed to push again, back into the value area. So by value area, the terminology I'm using there is it's reasonably valued. You're going to find the trades are going to be both long, buys and sells in a fairly easy, even way. You're not going to have big moves, like big 3% moves up or down. You're probably going to have much smaller moves within, especially as you get further into the range. So I would expect somewhere in here, maybe a pullback next week. Again, 140 to 150 area. I'm looking to get some more Apple, add to my Apple long, and continue to grow that. That's just what it is. That's just what it is. If I don't get in the trade at all, I don't get in the trade, and that's fine. I'm waiting to be pulled into the trade. I don't need to force my opinion on the market and say, well, Apple's the best. I believe it. I'm smart, so I'm going to own it. Good on you if you're that guy or girl. I'm the person that says, here's a test. If you can accomplish this test, then that means it's bullish. If it fails to accomplish that test, well, then that's not bullish yet, or it's bearish. And I don't have any reason to go shorting Apple. That's for you daredevils. I stick with the easy money. So Apple is still sideways, still figuring out what we're going to do there. Long term, I'm looking to get into it with more exposure. Whether I go with some long-term calls, probably is what I'll be looking to do. Go way out of the money, way out in distance, or maybe in the money, but way out in time frame, so I can really catch some good moves there. And then Natty Gas, like we've done a fantastic job with Natty. This has been just a power move off the lows back in April. It's only been a few months that this move has happened, almost over 100%. So 245 up over $5 per contract. So 100% move in natural gas in a short period of time is pretty incredible. And if the dollar my dollar setup, my long-term dollar setup has us going lower the dollar over the course of, it could take, 6 months to a year. It could take many years for it to play out that way. As I have expected. It's not like a gonna happen next week sort of scenario, I assume. But this is one that hasn't really performed like some of the other assets out there that did. I mean, yeah, we were up in the mid-teens during the financial crisis, and you can see, relatively speaking, we're at 5, so that's this lower area right here. That's still a 200% move to get up to where we were in the 2008, 2000, even back into 2005 area. About 200% move there. And if that is in play, then that opens up the measured moves up into the 30s, which might not be incredible for people using natural gas, but it's there. It's something that we can get. I'm not taking a timely trade on Natty Gas. I'm still day trading Natty, not looking to take a position, and I'm not looking to own the futures. Probably I'll be looking in some long-term calls or something like that, mostly because it is a very volatile asset. I mean, we're looking at, here's a 7% day, here's a 4%, multiple, 2, 3, 4% days here. And then Thursday we had a 3% day, and Friday Thursday we had a 5% day, almost 6% day. Friday we had a 3% day. So this thing moves. This thing's more fun to day trade, but I want to get in, on some sustained weakness. I want to find a reason to get long Natty Gas. I want to buy some calls, long duration, way out of the money, and pay like a penny to make 10 or to 100, because I'm willing to go out so far and take the bet. Very asymmetric type trades. All right, again, pollinatetrading.com/subscribe. I do send out a lot more information during the weeks when stuff is interesting, so get there. It's a free newsletter. It's way more detailed than any of my tweets. Even my tweet storms aren't nearly as detailed as my weekly or even intra-week musings. And of course, that does include the weekly macro. This, whether I do it on YouTube or whether I go back and I just do the writing of it, you'll have those. Doesn't cost anything, and I try to put out something better than something that I've paid for over the years. I don't need to stuff 5,000 words into a newsletter that I can do it in 200 or 300 words. So sometimes you may see, wow, this was a short one, but understand that that's because I would rather treat your time with respect. Sometimes I do knock out a good couple thousand word one, and there's a lot to cover, but it's not a requirement. The word count isn't a requirement. All right, pollinatetrading.com/subscribe. Like and subscribe to this YouTube. Share this out with a friend if that'll help me out trying to start growing out the YouTube side of things. And I'll see everybody next week. Bye. Oh, here we are. Here we go. Dad's office.